There's a moment almost everyone has experienced. You open the door of a brand new car, take a deep breath, and think, I made it. The leather, the plastics, the shiny dashboard. It feels like success. But what if that smell isn't success at all? What if it's the smell of your future money quietly disappearing? Most people obsess over small expenses: coffee, subscriptions, random purchases. But then they walk into a dealership and sign a contract for $800 a month for the next 7 years without blinking. Doesn't that sound strange? Somewhere along the way, society normalized one dangerous sentence: everyone has a car payment. But what if that sentence is exactly what keeps millions of people financially stuck? A car payment isn't just a bill. It's a system that slowly transfers money from your future wealth into someone else's pocket. Banks, dealerships, and manufacturers. And the worst part? Most people don't even realize it's happening. Here's where things get interesting. People say, I own a $50,000 car. But that statement hides a brutal truth. Cars aren't assets. They don't put money in your pocket. They take money out of it. In reality, the moment you drive a new car off the lot, it loses a huge chunk of its value. Imagine buying something for $50,000, and 1 minute later, it's worth $40,000. Sounds insane, right? Yet people celebrate this loss every single day. Dealerships don't want you to focus on the price of the car. They want you to focus on one thing only: the monthly payment. They'll ask, what payment are you comfortable with? And suddenly, a car that was clearly too expensive magically fits your budget. How? Longer loans, higher interest, and years of payments. That's why car loans now stretch 7, sometimes even 8 years. By the time you finally own the car, it's already aging and losing value. Most people think a car costs the sticker price, but that's just the beginning. Add taxes, interest, insurance, maintenance, and fuel. And suddenly, that $40,000 car can cost $70,000 or more over time. And after all of that, the car might be worth only a fraction of what you paid. So the real question becomes, how much did that car actually cost your future? Now let's zoom out for a second. Imagine you're paying $800 per month for a car. Sounds normal, right? Millions of people do it. But what if instead of sending that money to a car loan, you invested it every month for decades? Over time, that single decision could turn into millions of dollars. Suddenly, the car isn't just transportation anymore. It's a trade. Comfort today versus freedom tomorrow. So why do people keep upgrading their cars? If the math is so obvious, why does this cycle continue? 2 reasons: status and psychology. A car is one of the most visible signals of success. Everyone sees it. It becomes a moving symbol of how well you're doing. But here's the truth. Most people aren't impressed. They're just imagining themselves in the same car. This doesn't mean you need to drive a broken car forever. There's a smarter middle ground most people ignore. Cars lose the most value in the first few years. After that, they become much more affordable while still being reliable. That's where the opportunity is. Buying a slightly older car and keeping it longer can completely change your financial life. The real flex isn't driving the newest car. The real flex is having no car payment at all. It's freedom. It's breathing room in your budget. It's knowing that your money is working for you, not disappearing into a loan. Because at the end of the day, cars are tools, not your identity. So the next time you feel tempted by that shiny new car, ask yourself a simple question. Is this upgrade worth years of payments and lost opportunities? Sometimes the smartest financial move isn't upgrading your lifestyle, it's protecting your future. If you want more videos like this exposing financial truths nobody talks about, subscribe to the channel.